Hello everyone, this is Andrew McNair from SWAN Capital with our May 2015 Educational Economic Update. In this month's video, we're going to be talking about some of the major economic news from last month to give you some insight into what they might mean for you as an investor. Now, as always, stay tuned to the end of this video for some required disclosure statements. So the Federal Reserve was in the news a lot last month as Fed economists continued to debate raising interest rates. Now let's go back to the basics for a moment. Why do we care? Investors care about interest rates because they affect a lot of things. Bond prices, mortgage rates, corporate lending, and inflation. So if you own bonds in your portfolio, you'll see that when interest rates go up, bond prices tend to go down as bonds paying higher rates come onto the market. Now, if you're in the market for a car or a house, higher interest rates will translate into higher loan rates and probably larger monthly payments. Now, if you own a business, also not good news because you'll pay higher rates for credit, which can translate into millions and sometimes billions of dollars in extra costs. So why do we have to raise them? Why are they looking at raising them? Well, the short answer is they need to get back to a normal monetary policy to fight inflation can become a problem in this ultra low interest rate environment if we're not careful. So to boost the economy after the last financial crisis, the Fed kept interest rates artificially low. But now that the economy is doing better, the Fed wants to slowly bring those rates back up. Now, however, the latest data shows that the economy may still be vulnerable to shocks, and the Fed knows it doesn't want to rush into raising interest rates too quickly. So at the end of May, let's look at the economy. The first quarter GDP numbers, we actually found out that the economy shrank, 0.7% to be exact, instead of growing. So while this news is not unexpected, it's not welcomed because it means that the economic recovery still hasn't reached escape velocity. The contraction appears to be because of winter weather, a strong dollar, and reduced business demand. Now, though we don't have all the data in for spring quarter yet, many economists are expecting a significant rebound in economic growth. We've seen estimates ranging from all the way from 1% to 3.2%. So it's clear there's a lot of room for debate going on in the economy right now. So on a more positive front, we got some good news. Recent employment data shows that the economy added 223,000 new jobs in April, pushing that unemployment rate down to 5.4%. Now, if you look at wage growth, it also edged higher, which means some workers were able to earn higher paychecks in a more robust job market. Now, in the weeks ahead, investors will be paying close attention to any insight from the Fed into interest rate hikes. They'll also have a lot of economic reports coming in to see whether first quarter weakness is going to continue into second quarter. We hope to see further improvement in housing, manufacturing, and consumer spending as the year continues to progress. But as always, we're keeping a close eye on financial markets and the economic environment. We're going to let you know if we think that changes need to be made to client strategies. So you'll be in touch with our next educational economic update. And make sure if you have any questions or concerns about today's video that you don't hesitate to call our office at 850-380-5137. That's 850-380-5137. Now, if you're a client of ours, you don't want to miss our June chocolate tasting. It's going to be a fun time filled with lots of chocolate, wine, and other beverages. So you want to RSVP as soon as possible because it's June 25th, and we'll see you there. Hope you have a wonderful June, and we'll see you on our next Educational Economic Update.